both from a market perspective and economically?
Well, they can mean a lot or they can mean a little. Some things that we're looking for during this kind of churn, so to speak, is, what are credit spreads doing right now? They're relatively tight, so nothing sinister out of that. Sector leadership is really mixed as well. So I don't know that it's a bad omen per se, but what you're waiting for is to see what is going to come out of this as leadership. I mean, the one, as you look back to the equity markets, you're starting to see energy, obviously, the last month perk up. Technology, we know, the Apple launch this week has been more of a market performer as well. And then you're just seeing, you're seeing a little bit better activity out of some of the defenses, but not enough to say a trend change. So I just think it's not trying to say what the market's going to tell you. It's waiting for the market to basically speak up and see where that leadership's going to come from.
What's more important to you this week? We get a slew of economic data. We also hear from the ECB. Is that more important, or are the Apple's iPhone 15 and the potential for a UAW strike more significant for you?
Yeah, we have a lot to pick from this morning, don't we? I would say more on monetary policy. If I think about Apple, I mean, that stock's up 37%. Technology is up over 30% this year as well. So I don't know what big surprises we're going to get from there. I think the UAW will put some focus back on, inflation. But then again, we had Walmart last week, the biggest private employer in the world, saying things are softening on that side. So I really think it's about ECB policy, how that relates to Fed policy, and this U.S. dollar, which has had a lot of strength here recently.
Keith, I'm hearing a lot of macro analysis, macro this, macro that. Unfortunately, we'll do this with Claudia Sahm in a minute. Love her to death. Keith, how do you identify a second leg of a bull market?
Well, what you want to see is so we've had the big move up. We're still in an uptrend. We're consolidating these gains, not seeing a lot of distribution. What you want to see is urgency in buying out of this range, right? So you want to see the breadth of this market start to expand. You want to see the percent of stocks above the 50-day moving average get to 80%, 90%, just showing a real, demand coming in and urgency to buy stocks. And then you want the sector leadership to really start moving more cyclical and be more broad-based. That's what we'd be waiting for to get more bullish on the upside. Conversely, if you start seeing the defensives start to tick up and credit spreads start to widen, that would be a signal more negative at this point. But again, we're neutral, strongly neutral, Tom and Lisa, against stocks, bonds, and cash right now. And some people want you to always have a strong call, but today we're just giving us we're taking what the market's giving us, and we think that's the right place. So
what does strongly neutral mean? That's such a fantastic way to describe the sort of ambiguousness of this moment.
Well, as a strategist, everyone wants to say, hey, this is the time to buy or this is the time to sell. And sometimes when you say you're neutral, they think that you don't have an opinion. And we do have an opinion. We're strongly neutral, saying we should be more aligned with, where your long-term asset allocation, of course, stocks, bonds, and cash, sticking higher quality and not taking those big bets across asset classes. But I will say, where we've been taking bigger bets is we've been overweight the U.S. all year. We've been most negative on emerging markets. That spread is wide, and we're staying up in quality and in fixed income. And we don't think you're being compensated today for the risk that you're seeing in the high yield market or the investment grade market.
Keith, great brief. Thank you so much. Keith Lerner is with Truist this morning. The only thing I know, afterthought strongly neutral on our math teacher. That's where we are.
Yeah, evidently.
We're like 3 days into the torture. And I said, well, what do you think of Miss Wang? And she said, I'm strongly neutral.
I think that both of my children are strongly neutral on their scholarly experiences. I think that that's really fun to listen to, because he really raises good point, which is people think that means you don't have an opinion. But it does. It's just that, there's not a lot of conviction to push you one way or another.
Granted, we've had this titanic lift in rates, which is completely unusual, and it's wrapped around the pandemic and all that. But the heart of the matter is we really don't know how to act at these points, as Alarian brilliantly says this morning, the last mile. This is all new. We really don't know what to do we?
And this is the reason why the Fed and the ECB are waiting, right? I mean, it makes sense. But at that point, so if you're an investor trying to get ahead of things, do you just basically say we can't? No, so then we're just going to be in the middle.
Lift of the market this morning on the Standard & Poor's 500 up 21 points, S&P up 0.5%.
It's a good point, though, in terms of when some of these higher rates, you talked about that surge in rates, when it's going to really become the norm where it percolates in so you don't have to say it's going to hit the market when it is hitting the market. And that's the reason why I think it's interesting that we're seeing the Instacart potential IPO, as well as the Twinkies and the Hostess
yeah, but these are
situation
going
being
concerns.
acquired.
I mean, Smucker's been making money for years. I mean, they mint the money on it. Instacart, to me, I mean, I don't know anything about it. I'm not qualified to warble on it. But the answer is Instacart the kind of business that should be going public? I mean, are they like profit making, and are they going to become a Dow Jones Industrial member?
Well, I will say that they're being valued at about a quarter of what they were just a couple of years ago, which, again, is it because they have to kind of capitalize right now, cash out while they can for their owners? Or is this that it's only going to get worse, or it's not going to necessarily be as high a valuation? Either way, people are throwing in the towel. They're raising money despite the higher yields and despite valuations that are subpar relative to recent history.
In this 8 o'clock hour in New York, it is September 11th. We welcome all of you around the world. We'll have remember it's at 8:46, and what I think is so important, Lisa, it is not Manhattan and the Pentagon and Shanksville, Pennsylvania, but it is also a president returning home. He will be in Anchorage, Alaska today.
Not in New York or near the Pentagon, which is the cause for some concern. On a bigger stance, though, it is amazing to think that it's been 22 years, and it is still catastrophic and very present.
Your translation device works.
Amazing. Say peanut butter.
Absolutely not. Sandra, what's next?
We need to hire, order supplies, control spend.
Just use Amazon Business. Hey, everyone, peanut butter.
Amazon Business, your partner for smart business buying.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. JetBlue has traveled a long way from its startup days, but CFO Ursula Hurley says growth won't change the airline's quirky attitude.
At the end of the day, we view ourselves as a disruptor and a maverick in the aviation industry, and I'm really excited to play a meaningful role in that growth journey.
Watch Chief Future Officer, Wednesday on Bloomberg.
I think that we're entering a very important period here where there's probably going to be a handoff from the focus on inflation onto the real economy data, and it's going to be a slow process. But I think that I'll repeat what I just said. Yields probably go sideways for now, but when they make the next big move, it's very unlikely to be up.
Stephen Major of HSBC, and that is what Bloomberg Surveillance is about. What a difference, I believe this was on Friday, between Major looking for lower rates at HSBC and Lisa Abramowitz, Mr. Davis, Earl Davis, at BMO Capital Markets, Bank of Montreal, just flat out going the other way, looking for longer.
The gap between the bulls and the bears is getting further and further apart. And I have to say, what happened overnight really confirms the uncertainty here. And I'm talking about the Bank of Japan in particular.
Yeah.
And the discussion of UEDA possibly knowing by the end of this year whether or not to end negative rates. That changed the scenario in markets. Is it going to have a lasting effect, and could it on the U.S. market for treasuries.
That's one of the uncertainties out there. And what I would say over the weekend, you know, you just sort of look at the zeitgeist, your eyes are glazed over, and you're looking at the computer screen, and the answer is the set of uncertainties right now are just extraordinary. And it's led by China. I think China takes top billing, but all these different narratives that we have clearly indicate, how do we get to November? How do we get to January? Where are we the 4th of July of next year? I have no clue.
I keep going back to Diane Swank saying that she has the humility, and I do too, of saying, I don't fully understand all the different threads and how they're going to come together in terms of painting the new economic narrative.
Our thoughts to Diane Swank and all of the National Association for Business Economics, including our Michael McKee, that were so close to what we saw 22 years ago on September 11th. Right now, we're going to dive into a conversation, and this is an informed discussion with a gentleman from Brown Brothers Harriman. Yes, currency is a litmus paper, but for Win Thin of Burma and for all of his work at Columbia, a good time to speak of the broader Pacific Rim. Win, my question for the day is simple. Are we going to see an export of disinflation out of a troubled China to Hanoi, to your Burma, and for that matter, across the Pacific to America?
I think that's the process that's in place. And to me, that's not a bad thing, right? We're central banks around the world, both developed and emerging, are fighting inflation. So, hey, a little bit of disinflation really isn't a bad thing. Now, the bad news is that disinflation is coming at a cost for China, right? We know that the economy is slowing much more than anticipated or desired. So it's a double-edged sword. But I think right now, with the market so focused on inflation, you know, a little bit of disinflation is good news. But hey, we've got a long way to go before we can sound the all clear on inflation fight.
I've got to ask the question, Dr. Thin, that people want to know from you, which is, can yuan go round trip back to 2005, which is about an 8.20 level? Do we see an outright devaluation as a solution for a troubled Beijing?
Well, I think they've been trying to resist that. If you look at the fixings and some of the sort of measures at the margin, they've been trying to prop up the yuan. They don't want it to fall out of bed. At the same time, I don't think they can really do much against it. You know, and we go back to sort of monetary policy divergences. As long as the People's Bank of China is in easing mode and the Fed is in tightening mode, there's really, to me, only one direction for dollar yuan, and that's higher. Again, they'll try and control it. I think the devaluation would be very, very dangerous because, you know, it would be bad for instance, Chinese corporates. They have a lot of dollar-denominated debt, and all of a sudden that debt becomes much more expensive to service. So for now, I think they hold off on the devaluation, but they lean against the depreciation. But again, it's not much they can do. It's like trying to fight the tide.
When we take a look at all of the stories that are kind of percolating, we were talking about the different narratives that are coming out of the woodwork and creating this confusing brew, I would say, more than a toxic brew necessarily. The one that stands out most to me is the Bank of Japan. And yesterday, what we heard from the Bank of Japan Governor Ueda was that if the Bank of Japan becomes confident that prices and wages will keep going up substantially, it will end its negative interest rate as among the options available, and that they will know this by later this year. How much does that change the game?
Well, it's really interesting. It tells you a bit about positioning, Lisa. I think everyone was long dollar yen, and you know we had these comments out of Ueda, but really, if you read between the lines, he's saying it's data dependent. You mentioned if wage and price pressures go the way they want, then maybe they can remove accommodation. It's to me, a very nuanced way of saying, hey, it depends on the data. And to me, the data is not so great out of Japan. Talking about wages, we just had wage data last week from July, much weaker than expected. The wages are not keeping up with inflation. So they're not getting that missing piece of the puzzle. So to me, the question is, well, how is the Japanese data going to go? And to me, it's been weakening. We had orders data out overnight, much weaker than expected. The domestic orders plunged 30%. So it's not just a China external story. Domestic activity in Japan is at risk. And I think that's the reason why, despite all this talk, and it is really just jawboning, the Bank of Japan is likely to be on hold for the foreseeable future.
So what do you take away from that? That positioning is perhaps overly weighted to a weaker yen, or that positioning is such that the reaction that we're seeing today, not just in currencies, but also in the bond market in Japan, is inaccurate and it's going to reverse?
Yeah, I do. I think the underlying fundamentals, again, we go back to central bank divergence. Bank of Japan on hold, the Fed is tightening, and that's going to, I think, really be maintained through year end. The positioning to me tells me that you had this sort of violent reaction to what I thought was a very balanced, nuanced comment. He said, if wage and prices go the way we want, then maybe we can remove a combination. That's really, quite qualified. And he's not saying anything about really promising anything, as any central banker should not at this point. They should be very much data dependent, sort of staying nimble. Anyway, regardless, the violent reaction to me tells me that yes, we're probably the dollar rally has been going strong. Maybe we got a little overextended. DXY's been up 8 straight weeks. So it's time for a little bit of shakeout. But to me, I think it's very dangerous to go short dollars into the CPI and PPI retail sales. To me, the data suggests that headline is starting to creep back up to 3.5%, 4%. Core is stuck near 4%. And that tells me that the Fed is nowhere near done. And I really think the market's underestimating the capacity of the Fed to tighten further.
Winthin, what is your dollar call out a year? I mean, it's an easy question with a really tough answer for anyone right now. What is your dollar call?
Oh boy, to me, a year is like an eternity in the market. That's a lifetime.
Agreed.
So I would say, look, 6 months out, I am very, very confident the dollar continues to power higher. Even between 6 and 12 months, I lose a little bit of conviction. But the way things are going in the rest of the world, the Eurozone's tipping into recession, UK are also tipping into recession, China's struggling. Yes, the U.S. Will likely go into recession next year, and that's sort of where my call becomes a little bit nuanced. So if and when the U.S. goes into recession, then that's when the dollars can sort of, I think, start to go down. But we keep pushing that out. To me, it looks like the momentum, Q3 remains strong. It's going to carry over to Q4. So maybe mid-year next year we get a recession. I don't know. It's all anyone's guess. But that's, to me, is the game change for the dollar. When the U.S. goes into recession, the Fed starts to recalibrate its settings. Now, that said, I don't think they're going to slash rates immediately. If inflation is still 3-4%, I don't think they're going to turn around quickly.
Winthin, thank you so much for the brief this morning. Winthin of Brown Brothers Harriman and Claudia Sahm coming up, as well as Gina Martin Adams. So we've got a pretty eclectic way to get you to the 9 o'clock hour as well. I love what he said there, honestly, and he's a grizzled pro, about trying to get out a proverbial 1 year. I couldn't write a 7-page, like the way Anthony Dwyer at Canaccord Genuity does. He just throws it out. This is where we'll be in a year. I don't have a clue.
Yeah, I don't think we can game out where we're going to be in 2 days, which is the reason why Win was talking about how people are kind of hesitant to really make any big moves. He was saying it's dangerous to go short the dollar heading into CPI and PPI because people are underestimating what the Fed is willing to do.
Well, we'll see what the Fed will do. And I agree. You and John have mentioned this. We've got to get beyond the news flow this week down to the UAW strike on, I believe it's Friday, or I can't remember if it's midnight Friday or midnight Saturday.
It's midnight Thursday. It's 11:59 is when the deadline hits on Thursday.
And so then into Friday.
Friday.
Okay, so I'm glad somebody's got this figured out. But,
burning question for you, Tom.
Yeah.
Did you actually subsist on Twinkies?
Yeah.
For years?
They had these
3 years?
These fruit pie things that were painful. Smuckers to take out Hostess. It's a blue chip stock. Talk about free cash flow. Thanks, Dad. Future's up.
Connections. For over 200 years, they've been Citi's business. From connecting oceans and continents by helping finance the Panama Canal, to today, where we're still making our most important connections, people. We connect security and innovation, all to help drive growth. Our global scale connects businesses to over 160 markets, and today's ideas with tomorrow's opportunities. For the love of moving businesses forward, for the love of progress, Citi.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
right.
So it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right?
Yes.
And making sure you have the right amount of people
yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
Bloomberg Surveillance. It is September 11th in New York. We welcome all of you. Lisa Bramwitz and Tom Keene, John Farrow will be with you in the 9 o'clock hour. The elite meet to greet in downtown New York right now. We've seen former Mayor de Blasio, many others. The vice president will be in attendance today as President Biden is heading from India back through Vietnam and will be in Anchorage, Lisa, this afternoon, a different 9/11 for the President of the United States.
In Alaska, rather than New York City, one of the epicenter, or the Pentagon in Washington, D.C., on a day that still feels like it was very recent to a lot of people out there. I think that we cannot emphasize enough how it doesn't feel like 22 years.
And it doesn't feel like 22 years. In fact, I would even go so far as to say that it's harder every year for me. I believe this, yes, the vice president now moving to the ceremonies, which circle around 8:46 this morning. And of course, the first plane striking these buildings. And it was it's shocking when you read the history again and remind ourselves it was a 17-minute, I believe, differential between the first and the second hit in New York. And I think back then I thought it was like a 2-hour difference, and it wasn't.
And just
17 minutes.
It was. It feels very recent, just the visceral experience of the fall.
I think both of us struggle with it. Some other people do better, but there we are. And for all of you worldwide, we'll bring you some images of this at 8:46 and through the 9 o'clock hour. We do this with markets open as they opened after 9/11. Futures up 23, Dow futures up 79. And the yield space, higher yields. I'm going to call it, can we say it? I haven't used this phrase, Lisa, in months and months. Dare I say it's a risk-on feel today?
It is an ambiguous feel, I would say. It is a neutral, a strong, aggressive neutral that Keith Lerner was talking about, at least.
Painfully
in the
neutral.
Exactly, in terms of lack of conviction ahead of a massive week for economic data.
It'll be interesting to see. Joining us right now, Claudia Sahm, who's taking a Victory Lab, founder of Sahm Consulting, former Fed economist. Claudia, you absolutely nailed a good number of months ago when everybody calmed down about the recession game. Revisit that call right now. Can you calm down about the recession call, or are there datas there within the Sahm rule that says we must beware?
Right. So first of all, no victory laps. I'm not going to do that as a forecaster. It was very clear for well over probably 2 years that we had a lot of the inflation was driven by disruptions from COVID and then from the war in Ukraine, right? So that's what we're seeing unwind, and markets have reacted well to that because as inflation comes down, that says the Fed needs to do not as much, and we have lower risks of recession. And we've seen that. And so I understand why the soft landing has gotten popular. And yet I am concerned, right, as I watch the labor market data. So the payroll data, they were averaging 3 months, 150,000 through the last 3 months. That's half of what they were doing early in the year. We have seen payrolls cool off at a really steady clip, and they got to bottom out soon. Right? Like if things keep going south, that is what a recession looks like. So I think we're in this very like hold your breath kind of moment with the economy in terms of now we're going to see, is this normalizing, getting back to pre-pandemic, or are we heading towards a recession?
This is a really important way to crystallize, Claudia, what a lot of people are looking at as encouraging news in the labor market. What about you makes you say it's a hold your breath kind of moment where we're not sure whether it's going to normalize or keep going south?
In the labor market, there's many key pieces that they get momentum going, right? So the unemployment rate starts out slowly and then it builds up steam, right? And we haven't seen the unemployment rate moving up. The SOM rule, the recession indicator, is far from triggering, but that doesn't mean that by the end of the year, we're in a space where it's picked up enough steam and we're in a recession. So the labor market is so important because it really supports the consumer spending. And we've seen the labor market cooling off. We should eventually see signs of consumer spending cooling off. There's been downward pressure on inflation. But it's a really tricky needle to thread in terms of doing just enough, but not too much.
Which really feeds into this question of whether what we're seeing with the UAW and some of the discussion around strikes and discussions around getting paid more is something of a rear view mirror, as we were talking about earlier in the show, or whether this is a precursor for what's to come, especially as there is a reglobalization or something of that nature going on. What's your view on that?
I think there's an aspect of it, particularly with UAW, that is a looking backward, right? We've had some years of really strong economy. We have seen big profits by the automakers, and they don't renegotiate these contracts every single year. So now is the time, right? And there's a lot of history. They took a really weak contract in 2009 because the automakers were kind of on the cliff's edge, and now the tables are turned, right? So I think this UAW, I think, is a very backward-looking, and I think it makes a lot of sense why they're asking what they're asking for.
Dr. Seng, there's a modest uproar in the United Kingdom about getting the eco data wrong, and that the eco data was pretty gloomy, and they're reassessing and redoing the math, the statistics, to a more optimistic United Kingdom. Do you have faith in our data? Could we be in for a data surprise out of the good people in Washington?
We need to be very careful about reading too much into a single data point. We're going to get a lot of data this week. You should look at the totality of the data, because if you hang your hat on one piece of data, we got revisions in prior months of payrolls. This has happened all year, right? We think it's strong, and then next month we find out it's not as strong. The New York Fed did some really nice analysis of the PCE core inflation, and there's a good band of revisions. Like right now, we could have something from 3.7 to 4.7. That's a big. That's a big band. So these are things that we need to keep in mind, and the Fed knows these things.
Right.
Like we think about revisions, but it makes it really hard.
Right.
Like we don't know what we think we know.
Claudia Seng with us, and we will continue with Dr. Seng. The 9/11 memorial, Mayor Adams with other assembled mayors, including Mr. Bloomberg. I had a sighting of Mr. Giuliani as well, and Mayor de Blasio. Along with them, the vice president and the governor of New York, Governor Hochul, Lisa.
All looking to commemorate a day that feels very recent in the minds of most people in New York in this business, and comes at another pivot point. And we're talking about the economic trajectory of the United States right now. And we remember 22 years ago when this really keyed off a real fundamental economic shift, not just for the city, but more broadly as well. So with us is Claudia Seng, and I want to go there with you in terms of this muddle that we're in, this sense of whether we're going to see some sort of similar turmoil in the data that will really come out in a way that's predictable, and how we sort of look at those pivot points.
Yeah, well, I think Claudia Seng has been really, really good on this. And to review this, folks, she has always been not a skeptic. This is important. But Dr. Sam has not been a skeptic, but she said dig deeper into the data than the simplistic data, particularly that the financial media has. So I think there's a huge respect, even among elites at the Fed and frankly at other central banks, for the granularity of what Claudia Sam does.
She was saying that it's a hold your breath moment for the labor market, that there could potentially be a continuation of the decline that we're seeing in some of the momentum and how that could be a real problem. We're speaking ahead of a key week of economic data. CPI on Wednesday, we get out of the United States.
I completely forgot about that. We have CPI on Wednesday.
CPI on Wednesday.
I missed that.
PPI on Thursday, as well as retail sales at a time where people are wondering how long the U.S. can keep having consumers spend to such a degree when savings really do come up.
Yeah.
And this all comes the same week that the ECB has to make a decision, really with a slew of conflict and slowing growth.
Over the weekend, this happened to be a weekend where I did a lot of reading, and the different narratives that are out there are extraordinary. And you say to yourself, within equities, bonds, currencies, commodities, where are they going to fit in? And John was talking about the persistency of iron ore actually showing a China that's not going to end. I mean, for those of you on radio, we've lined up the events of the week, and what's not on there is China. Maybe this is a week where we walk away from China, but I would suggest, I don't hear people talking about 0, 1, 2% Chinese growth. I think there's a more buoyant tone there, even with their financial challenges domestically.
Well, today, or overnight, I should say, heading into the U.S. day, there was some strong credit data published out of China, which raised questions, are we at peak pessimism for China, which might have been part of the reason why the UN was actually responding to some of the jawboning that we heard from the People's Bank of China. I mean, this to me is interesting. Are we seeing signs that things aren't quite as bad?
And to dovetail it in with Mandeep Singh here, the key thing for Mandeep Singh is Apple's supply chain, which is where Mr. Cook created his career at Apple. And that goes again to we're bringing it full circle here to the president visiting Vietnam, just as one example, or maybe the hopes and dreams of India, where there's a complexity here of these stories dovetailing together, and I can't tell you where they're going to be. We're in September. Where are they going to be Halloween, 50 days out when my pumpkins have rotted?
Right. Which story is going to be more important? Do you buy a pumpkin early? Is that what you do?
We buy them decorative, and then, we have a carving feast like everybody else. It's embarrassing.
Wait, you buy them pre-painted? You're a pre-painting
I'm not doing the pre-painting thing. But, the vet bill and kennel fee, they got to go out trick-or-treating, so...
What are they going to dress up as? Cats?
Well, they go as cats. One year they went as cats. That didn't work out.
But this is a good point in terms of not really understanding how to game out further what's going to be the predominant story at a time where geopolitics is coming in at a changing sort of economic regime.
We welcome all of you on a September 11th on a Monday. September 11th for us on the weekend is just different. It is about a working day, as it was, with futures up 22, with life going on 22 years out. The imagery is very appropriate for September 11th, but this time is different. At the Pentagon will be the First Lady. In Manhattan will be the Vice President of the United States. The second husband will be in Pennsylvania, I believe. And the president flying back from India in Vietnam, that in itself, some huge ceremony in Vietnam, and to see the president have remembrances here. We'll see this later this afternoon, I believe, in Anchorage, Alaska. So it is a different September 11th, Lisa.
It is a different September 11th. And, we were talking earlier about how long it's going to remain such a front and center kind of visceral feeling. And it just has not faded. And we keep talking about how much that just has been a present feeling. It reconfigured the downtown of New York City. It reconfigured certain aspects of markets, really. And yet, one thing that as we celebrate the sort of opening of markets every day with the ringing of bells, life does go on, and there is that sort of push-pull amid the tragedy.
The hallmarks of our lives, and for those older, very few in remembrance of Pearl Harbor, but the idea of John Fitzgerald Kennedy's assassination, and 22 years on from Pearl Harbor was Pearl Harbor, 22 years on, was 1963. I find that stunning. When I did that math in my head I believe it was yesterday. It really set me back here. And we see it, of course, in Manhattan, the beginning of the ceremonies here 3 minutes away from a first remembrance of a first plane striking the World Trade Center with mayors assembled. It was good to see Mayor Giuliani and Mayor Bloomberg there as well as they lived it.
We're 3 minutes away from the moment of silence. Claudia Sahm back with us for a moment. And I would love just, Claudia, to get your sense of how an economy reshapes following a tragedy, following a massive disruption, and what lessons kind of are applicable today.
Right. Well, we're watching it today with COVID. I mean, we've certainly had national tragedies like 9/11 in the past. It's slow and it's painful. I think many economists underestimate that 3 years ago we shut it all down, right? And there were a lot of disruptions. And I think, I certainly underestimated how long it would take to get things back on track.
Connections. For over 200 years, they've been cities' business. From connecting oceans and continents by helping finance the Panama Canal, to today, where we're still making our most important connections, people. We connect security and innovation, all to help drive growth. Our global scale connects businesses to over 160 markets, and today's ideas with tomorrow's opportunities. For the love of moving businesses forward, for the love of progress, Citi.
Abroad on September 11th, and the vice chairman stepped up big in the absolute chaos that there was through that day and even into the next day, September 12th. Roger Ferguson is the one that solidified the financial system of America on September 11th.
A lot of commemoration today on the anniversary, the 22nd anniversary, when we think back to a time that was so recent, it feels like, in so many ways, that did reshape many aspects of downtown. The pomp and circumstance has grown with the years that have gone on, but really the emotion still very much present, Tom.
We welcome all of you worldwide and across this nation for this set of ceremonies. We saw the Pentagon earlier this morning, and I believe we'll see that later. And of course, Shanksville, Pennsylvania as well. And again, the President of the United States in Anchorage, Alaska. Look for that later this afternoon. It's still emotional. There is a bell in Lower Manhattan. It's every year. I keep waiting, Lisa, for this to get easier, and it just doesn't.
No, it does not. And it doesn't for all the families that were torn apart, and it doesn't for all the people who lost the people with them who loved them. So
Mayor Adams lined up with the governor of New York and others. Let us listen in now to this moment of remembrance.
Right, quick, march.
In Manhattan, in New York, a ceremony that we've seen for 22 years. Again, Bloomberg will give you full coverage through the day on Bloomberg Radio and Bloomberg Television of these memories across the nation. We'll listen a little bit more to this beautiful music. Firefighters, police officers as well. A data check here to continue back to our world. The futures up 23, Dow futures up 71, and the VIX 14.16. As we look at the equity markets and where we are in 2023, I can say it was easier in October of last year when Gina Martin Adams said, you have to participate, you have to be in the market. She never said, go to cash. She joins us today at a time where a lot of people want to go to cash right now. Cash is 5% plus, et cetera. There's an allure there wasn't there over 16, 17 years.
Right. And it is a very different environment. The equity risk premium is substantially lower than it was 15, 16, 17 years ago. It is a much more difficult environment for investing because of the distortions in the equity market as well. If you look at where the valuation excesses are in the S&P 500, they're almost entirely in the tech space, in the top 5 to 7 stocks specifically, and those stocks are very, very vulnerable at this moment in time, as we've experienced over the last couple of weeks. Any news on Apple, which is the biggest company in the United States, but also now bigger than the entirety of the small cap index in terms of market cap, is going to have a very significant impact on the index at large. So there are a lot of distortions to contend with. It certainly is a lot more difficult this time of this year than it was this time of last year, when investors were all very fearful. Now investors have generally gotten back on board, have been more interested and engaged in the equity market, and that naturally creates much more difficult investing conditions.
Is this a frustrating time to be trying to come up with strategy?
You know, I think that you could say that about any point in time. It's always frustrating. It's always challenging. There are new challenges. It's part of the reason I love what I do. It's never the same. Every day is different as an investor. Today's investing climate is absolutely substantially different than it was, especially 10 years ago, right after the great financial crisis. You had an environment of certainty with respect to interest rates that was unique in historical perspective. We had not been through that kind of climate before, at least as an investing generation. And when you have an environment of extreme certainty in interest rates, extreme certainty in terms of inflation and inflation levels, as well as volatility, that creates very different investing conditions than that which exists today. I think the most frustrating thing for most investors today is how generationally different the interest rate landscape is. The inflation landscape that is the backdrop for that interest rate landscape, incredibly contentious and difficult for an investor that's been in this market for 20, 30 years, in which we just haven't seen this kind of climate.
Right now, people are talking about the difficulty in trading ahead of some key data that we get this week. CPI on Wednesday, PPI on Thursday. From your vantage point, how important are those data points? How do you trade around them at a time where it's not going to be one data point that moves the needle for the Fed?
Yeah, so it's different now than it was, say, earlier this year. Inflation became this major turning point for stocks late last year, early this year, when CPI crossed over PPI for the first time in more than a year. Consumer prices were finally rising faster than producer prices. Both are decelerating. So now it's a matter of continuation. That critical turning point was really consequential for equity portfolio strategies, without a doubt, and was a point in time when you wanted to rotate into more cyclically oriented sectors, away from defensive sectors, toward sectors with the potential for more margin expansion, whereas before we were sort of just generally worried about everything. Now it's just, can we continue to see this momentum, which is a very different environment. And frankly, it's a lot more difficult because you don't have these major turning points, these major catalysts for change. It's, will the Fed finally stop? It's, will CPI and PPI continue to improve, which creates actually greater degree of stress and risk than the major turning points, which are the bigger opportunities.
My textbook says I'm supposed to look out 3 years. So if I do the math on Walmart at a revenue growth of 5% per year, I think that's a simple revenue growth of 15%. Microsoft's going to give me, let's say, 11% per year, which is a simple growth, double 33%.
Right.
Why in God's name wouldn't I buy Microsoft over Walmart?
Well, I think that most investors are doing that same calculation and coming to the same conclusion based upon where multiples are. You would assume that that is arguably priced in the stocks.
So are they rich? Is Microsoft or these luxury goods in France and the rest of them, are they value stocks?
They are still growth stocks. They're too rich to be value stocks unless you get a surprise to those expectations, which I think is increasingly what investors are counting on, is not only am I going to get that 33% growth, but I'm going to see a surprise to the upside from that growth outlook. And that's what's commanding this excess in terms of valuations.
What do your people say? I don't care what I think. Or, what
a lot of it, frankly,
say?
Depends upon the rate of assimilation of AI and the rate of growth of AI. It's a transition in capital spending.
She has no clue. She's just reading Mandy.
It's very true.
I think we all are, honestly. We all are trying to understand exactly what the implications are here.
Well, and I think that's what got priced partially into this tech space over the course of the last 6 months is, oh, wow, this is something new. We don't know how to price it, but we're going to presume that it's a lot faster potential growth than we were pricing 6 months ago. What is that faster potential growth? It's largely going to depend upon how fast those programs get embedded into capital spending plans, how fast they become an integrated part of overall operating efficiency improvements. And these are still TBD, right? We don't know, for instance, how fast a consumer staples or a retail company is going to pull AI into their operations. We have a pretty good handle on technology providers themselves. What we don't know is the rest of the economy and how fast that can improve.
It's a blue chip stock. Hostess was taken out. I lived on Twinkies for there was a 3-year window in the 60s where I single-handedly propped up Hostess. Is Smucker's, do they care? Does Smucker's, Hostess, do they care about AI?
Sure, why not? In terms of their brand value, think about what their intangible assets are on their balance sheet and how important their brand is to them. To the degree that they can utilize AI to assess the degree of brand improvement.
AI is going to help them
100%.
with peanut butter, grape jelly?
Advancements to understand better. They can use any form of technology to figure out how to access their market faster. These are all efficiency improvements for these companies. In particular, the brand-centric improvements have huge upside for utilizing AI to figure these things out.
What does it mean to you that some of these deals are coming through right now? I mean, the fact that we are seeing this acquisition of Smucker's buying Hostess, of the idea that Instacart is potentially going public even at a reduced valuation.
Yep.
Are they trying to time the market? How is this playing out?
I don't think they're necessarily trying to time the market. I think it's a combination of things. The first is, one thing to consider is companies are sitting on an enormous amount of cash. And I think that we sort of forget the fact that cash on corporate balance sheets is still near all-time highs, even with debt increasingly accumulating and the cost of debt rising. Cash is still enormous, and it is fueling some degree of transaction value. The second thing to consider is just in an environment of uncertain growth, where growth prospects are going to come from, sometimes the best way to utilize that cash or to utilize your balance sheet is simply to buy growth. When you can't invest in it yourself, you have fewer return on investment ideas. Buying growth turns out to be a pretty reasonable opportunity for some of these companies. And then in terms of deals coming to the market, I mean, we've been through 20 years now of just no deals coming to the equity market. So any deals coming to the equity market are generally pretty well subscribed, in particular deals that are in hot spaces, in growth areas of the market. Deals are going to be subscribed because there is still some demand for equities, public equities, despite popular belief, and there's very limited
markets. This afternoon, one of my favorite people, Howard Lutnick of Cantor Fitzgerald, will be with us in the 2 p.m. hour. He has, with his son, such memories and pain of September 11th, an important annual visit with Mr. Lutnick, always valued by Bloomberg. We're going to leave you this morning with the reading of the names, and Lisa, the hardest part here, these kids got bigger.
Yeah, well, yeah, they lost people who they didn't even remember.
They were little.
They were little.
And they're not little anymore. But it continues. Thanks to our team for the imagery today of September 11th, and we'll continue this. John Farrell will have it on television through the 9 o'clock hour, and we'll have it on radio as well. It is September 11th.
Ireland is a fantastic place to do business, and the reality is that we have an ecosystem in Ireland where there are multinational corporations and a great talent pool.
The dynamicism of the country, the commitment from the government and organizations like the IDA.
There's a degree of practicality, common sense, and thoughtfulness.
We were blown away by the reception we received. The talk matched the walk.
They're brimming with sensors. There's several cameras that look out at your world because we're mapping your physical world so we could put the content in there. There's several cameras looking at your eyes so we know where you're looking in your physical world. And that's a lot of data. That's a lot of very personal data. There's a number of other sensors on the device that are needed to make it work in the way it does. So we feel strongly that, first of all, people should know what these devices can do. And since we're at the beginning of the curve, let's work on the right guidelines and put those guardrails in place now versus letting it out of the bag and trying to rein it in, several years from now.
So what rules would you put in place, and who should make up and enforce the rules?
I think it's definitely a public-private discussion, but it's a very complex technology. So I actually spend quite a bit of time in DC talking to folks, saying, just educating them on what it could do. But I think first and foremost, the data that it collects, there needs to be an understanding, the user needs to understand the level of data that it's collecting, and then be the one who says where that data goes.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader. Yeah. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
In many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
This is Bloomberg.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, we start with this quote right here from John Williams of the New York Fed to Mike McKee. Monetary policy is, quote, in a good place. Going into the Federal Reserve meeting next week and going into some important data this week. Equity futures positive here by 0.5% on the S&P. On the Nasdaq pushing higher as well. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Live from New York, coming up, the Federal Reserve going quiet ahead of CPI data. Secretary Yellen feeling good about a soft landing as President Biden weighs in on everything from China to John Wayne.
Good evening, Vietnam, and good morning back in America. Now, let me also speak to significant business we got done in India during the G20 summit. This was an important moment for the United States to demonstrate our global leadership and our commitment to solving the challenges that matter most. Really what this trip was about. It was less about containing China. I don't want to contain China. I just want to make sure we have a relationship with China that is on the up and ups. China has a difficult economic problem right now for a whole range of reasons. There's a movie about John Wayne. He's an Indian scout. And they're trying to get I think there's the Apache, one of the great tribes of America, back on the reservation. And the Indian scout, the Indian looks at John Wayne and points to the Union soldier and says, he's a lion, dog-faced pony soldier. Well, there's a lot of lion, dog-faced pony soldiers out there about global warming, but not anymore. All of a sudden, they all realize it's a problem. I just think that there are other things on leaders' minds, and they respond to what's needed at the time. But I tell you what, I don't know about you, but I'm going to go to bed.
We're just waking up. President Biden from the G20 over the weekend. Bloomberg's Anne-Marie Hordern will join us shortly to discuss all things Washington, plus investors bracing. The key pieces of economic data this week: U.S. inflation coming up on Wednesday, retail sales on Thursday, setting the stage for the Federal Reserve and its next rate decision just a week away on September 20th. This as Secretary Janet Yellen expresses fresh optimism that the U.S. will be able to contain inflation without major damage to the job market, saying this: every measure of inflation is on the road down. That conversation still ahead with Citigroup's Kristen Bitterly, along with TPW's Jay Poloski. Plus, JP Morgan's David Leibovitz joins us at the opening bell as Apple prepares its big iPhone unveiling tomorrow. This after shares fell by nearly 6% last week. Caught between the crosshairs of the tension between the United States and China. That's going to be a big conversation for us a little bit later, with equity futures positive here going into that opening bell. But first of all, for us this morning, it's September 11th, marking the 26th anniversary of the 9/11 terror attacks that hit New York and Pennsylvania back in 2001. We honour the victims, first responders, and all of those around the world impacted on that very day with a moment of silence in observance of when United Flight 175 struck the South Tower of the World Trade Center.
Darren Christopher Bohan,
Lawrence Francis Balso,
Vincent M. Bolands Jr.,
Tori Hamzavi Bolorci.
Connections. For over 200 years, they've been Citi's business. From connecting oceans and continents by helping finance the Panama Canal, to today, where we're still making our most important connections, people. We connect security and innovation, all to help drive growth. Our global scale connects businesses to over 160 markets, and today's ideas with tomorrow's opportunities. For the love of moving businesses forward, for the love of progress, Citi.
Is crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
This week, we're going to have the CPI data.
CPI. The CPI print.
We do expect the CPI to come in strong.
The headline is expected to be fairly high.
Driven by energy prices moving higher.
We'll see what happens with the core.
Where does inflation finally go?
What some people are forecasting is a rebound in core inflation.
We are expecting the inflation numbers to continue to come down.
Continuation of the positive trend. A continuation of the drop feels the most likely scenario.
What does the Fed do with that?
Unless you got something very significant on CPI, I think they're not going in September.
This is a very complicated time for the Fed. The question will become the November meeting. Markets should not jump to conclusion too easily as to what's going to happen beyond September. We'll have to see how the data plays out.
Big week coming up. CPI data coming up on Wednesday. Retail sales coming on Thursday. Setting the stage for the Fed and its next rate decision just 1 week later on September 20th. Joining us to discuss is TPW's Jay Pulosky, Citi's Kristen Bidley. To the both of you, thanks for being with us. Let's start with you, Kristen. Just how hot does CPI need to be later this week to encourage maybe another move from this Federal Reserve?
So I think our expectation right now is that it's going to be in line with market expectations. We know that energy prices have ticked up higher. So provided that we don't see anything outside of what the broader market is expecting, I don't think the Fed's really going to change the trajectory in terms of September. So we think they're going to stay quiet for September, especially given some of the cooling in the labor market that we've seen. But November is really what the market is going to look towards.
Andrew Honhorst and Citi, your colleague, of course, are looking for another hike in November. I'd have to ask this question of you, Jay. If the Hawks aren't screaming for a hike this month, are we basically done here?
Yeah, John, I think we are. You put up Fed Governor Williams' comment about monetary policy being in a good place, and we would agree. We're really focused on transitions and what gains traction during times of transition, and we're transitioning in the U.S. and in Europe, we believe, from monetary policy to fiscal policy. And so one of the things we think that has traction is the disinflationary pace, which is taking, which we observe in the United States, Europe, and pretty much globally outside of actually, funnily enough, Japan and China, where inflation is picking up a bit. Both good things in both cases. But to us, we're really not focused on the Fed. We're focused on the traction that fiscal policy gets in the United States. We think that's going to drive a manufacturing rebound, which supports the economy, supports earnings, and supports risk assets.
So, Jay, over the weekend, Torsten Slock of Apollo put out a deck, a load of slides. Great charts in there, showed delinquencies up, bank lending down, perhaps a reason to sit and wait for this slowdown to come through the pipeline, this further tightening to come through the pipeline for the Federal Reserve. Are you saying maybe those long and variable lags aren't so long, they're not that variable? Maybe we've seen them already?
Well, you know, a lot of people, and people I respect, Torsten's one of them, but others as well, talk about the lag reaper and lags and things of this nature. We think the consumer is fine. Household net worth, you know, it just hit a record. Delinquencies are very low relative to history. Credit is not showing any signs of significant problems in the high yield space. Financing last week was a record in the investment grade space. So we're of the view that the economy is going to accelerate. We actually think the Fed is going to double its 2023 GDP forecast next week. And currently, the consensus for U.S. GDP next year is 0.9%. We think that's way too low. And so we expect growth to continue to develop over the course of the coming year. And earnings, again, reflect that, where earnings revisions, another thing that we're very focused on because it drives stock prices. Earnings revisions have moved up. They've inflected higher, and we expect that to support equities.
Jay, I'm going to borrow that phrase and ask it to Kristen. Kristen, is the lagged reaper just around the corner?
So I think what's interesting is that the data here, you can actually find like two very different stories. And I think we've experienced this over the past couple of weeks. So one of the things that we've been looking at is just looking at the personal savings rate. So the personal savings rate right now is around 4.2%. Pre-COVID, that was around 8%. So one of the arguments for a hard landing, for example, is this idea that the personal savings rate and whether or not the consumer has depleted the stimulus that we experienced over the past couple of years, if that has to go from 4.2 to 8, that's going to have a severe impact on the economy. However, I think one of the interesting things is household wealth has massively increased due to the appreciation of home values and also the number of consumers that have locked in historically low mortgages over the past couple of years. And so that would only indicate an uptick from about 4.2% to 6%, which would be much more in favor of a soft landing. So I think you have to look through to all of these nuances and really parse through the data to say whether or not the consumer is strong or not.
I'm having a tough time of passing through the data, Kristen. I've looked at it over the last week or so. I just see tension, conflict, contradictions. I get there's a slowdown beneath the surface in the labor market. Maybe you see that in wage growth. Perhaps you see that in job openings. And then I look at the ISM last week. Fantastic. I look at claims, super low, the lowest since February. Question I asked last week, I'll ask it this week, Kristen. How much weight should I put on one versus the other?
I think this is the argument why, from an investment standpoint, you have to stay very balanced. I think you can make a bull case, for example. The bull case would be one where you say that inflation does continue to come down, that we've seen resiliency in terms of some of this data, that we have seen signs that the labor market is cooling. And I think the most important part is that the recession that many people have been anticipating, maybe we've already seen it from a profit standpoint and what could be viewed as a rolling profits recession, because starting in Q4 of last year, you already had 7 out of 11 sectors in profits recessions. Just in Q2 of this year, you saw 6 out of the 11 sectors in profits recessions. And so I think when you put all of that together, you have a strong stability case. But I think the bear case is one, rates higher for longer. What if inflation is stickier? And so this really requires a lot of patience and a lot of diversification within your portfolio.
Jay, is the outlook for profits getting worse or better?
Much better, John. I mean, it's a fact. It's not an opinion. Earnings revisions have reflected upward. Currently, the consensus for 2024 is about $246, suggesting low double-digit earnings growth. And that's important because valuations, the gain that we've had this year in the S&P has been driven primarily by multiple expansion. Going forward, we need to see that earnings uptick and that earnings come through with that stronger growth as we shift from Fed tightening to fiscal expansion and manufacturing recovery.
Jay, can you say the same thing about multinationals exposed to the slowdown in China, the stagnation in Europe?
Well, one of the things that should help those specific companies, John, is if the Fed is done, as we expect, the dollar rally, which has been pretty strong over the last 8 weeks, up 8 weeks in a row, surprisingly to us anyway, we think that does not gain traction. And therefore, over the coming year, the dollar should weaken relative to the euro. It's at a record low versus the dollar in terms of valuation. Same with the yen. And that will help the multinational companies. And we've done a lot of work of this over the years. And really what drives U.S. companies is what happens in the U.S. Even if they have exposure to other parts of the world, the driver is what goes on in the U.S.
8 weeks of dollar strength into this week. The euro right now stronger against the weaker dollar, on the session at least, at 107.30 going into the ECB on Thursday. Over the weekend, the focus, of course, on the G20 wrapping up in India. World leaders discussing a wide range of topics from climate change to China. This is Secretary Yellen expresses confidence that the US will stick a soft landing, saying this: I think you'd have to say we're on the path that looks exactly like that. Every measure of inflation is on the road down. AMH is with us here in New York City. Anne-Marie, the politician speaking there or the economist?
Well, it does sound like she's looking at the slew of U.S. data. And what that does show is that as inflation is coming down, they are still able to maintain a robust jobs report. And this is really an opportune time for the Biden administration to want to tout this potential soft landing, because, of course, Biden is not just the president right now, but he's looking for re-election next year. So it does seem that we're hearing more of growing confidence from the administration about sticking that soft landing. Of course, though, Jonathan, Secretary Yellen also talked about the fact that they are monitoring the slowdown and what's going on in China and the potential risks that that might mean to the U.S. or global economy.
Looking for re-election with crude at $87.60 and gasoline prices going in the wrong direction. Anne-Marie, what's the official take from the White House on that now?
Well, it's challenging. And what we did hear from some officials is that they think that what we saw in terms of what Saudi Arabia and Russia did, which was extend those cuts for longer than what was expected, is that they thought the market would stabilize. Of course, the concern is that we're actually past peak driving season in the United States, which was in the summer. So it's very weird that you see gas prices ticking higher, and $4 is what we're nearing towards on the national average. And obviously that is a huge political problem, because every day American consumers will be reminded, because it's right there on the side of the road like an advertisement, that it is expensive to fill up your tank, as it is expensive for other items. Inflation is a key concern for Americans, and they continue to give the Biden administration poor remarks when it comes to handling of the economy.
AMH, thank you. On the latest, a wide range of issues over the weekend. Kristen Biddley, crude, close to 90. How does that square with the slowdown narrative in Europe, in China right now?
So when we're looking at what's happened, I think with crude prices, we clearly saw commodity prices jump around 6-7% in Q3, but they're still below their July peaks. And so we would not chase this recent rally in crude oil. A lot of it is more related to some of the the policy driven and also demand side driven. And clearly, I would say the major driver of the spike in the price is really what Saudi Arabia and Russia are doing right now. So I don't think that there's a broader macro context here in terms of what is happening in Europe and China. And particularly, I think for anything from an economic perspective for China, what we really need to see is stimulus. And so we need the Chinese government. That's the major catalyst in terms of whether we see that fueling additional rallies within commodities.
Jay, it's not just crude though, is it? It's a conversation we've had before. It's iron ore as well, at multi-month highs. What do you think's going on here?
Yeah, no, John, we'll take the other side of those comments. We're long commodities. We've been adding to commodities over the course of this year. There have been significant outperformer relative to bonds, and we expect that to continue. Yes, it is partly supply driven, but it's also demand driven. China oil imports are up sharply. And we think that suggests that the economy is starting to pick up. We're of the belief that one of the things we need to see, we talked about transition and traction. Obviously, the drips and drabs of Chinese policy need to gain traction. We do not expect the big bazooka stimulus. That's highly, highly unlikely. What we do expect is over the next couple of months, the stimulus policies that have been brought to bear over the last couple of months, there have been many of them, but they've been kind of small, will kind of catch traction together and drive the Chinese economy higher. And look, China is still growing at 4.5%, 5%. Manufacturing PMI was 49.7 last month, up 3 months in a row. Trade numbers last week, which everyone bashed, were actually better than expected and up sequentially. So we're of the view that in the coming months, China is going to reflect a better growth path, and that's going to be constructive for those very commodities that you mentioned. And so we have exposure and continue to hold exposure in the energy, industrial metals, as well as other segments of the commodity space.
Jay, look at that, like magic. You managed to say it and the lights stayed on. Last time Jay Pawlowski was bullish on China, the lights went off. Jay, stick with us. We'll talk about China and input costs a little bit later this morning with Jay Pawlowski and Kristen Bidley. Just want to set the stage for you this morning, going into the opening bell about 11 minutes away. Equities with a lift after a week of losses. The S&P 500 higher here by 0.5%. So equity futures pushing higher. Into the bond market, yields look like this, just a little bit higher as well on a 10-year by 2 basis points. The 10-year yield here at 4.28. The 30-year yield higher by 3 basis points to about 4.37. The New York Stock Exchange and the Nasdaq now observing a moment of silence to remember the terror attacks occurring 22 years ago on September 11th, 2001.
Connections. For over 200 years, they've been Citi's business. From connecting oceans and continents by helping finance the Panama Canal, to today, where we're still making our most important connections, people. We connect security and innovation, all to help drive growth. Our global scale connects businesses to over 160 markets, and today's ideas with tomorrow's opportunities. For the love of moving businesses forward, for the love of progress, Citi.
Most of the large Chinese technology companies, let's say Alibaba, Baidu, Tencent, they have gigantic market values and they're very prominent in China, not as prominent outside of China as obviously in China, and certainly not that prominent in the United States. TikTok, by contrast, is not in China, but it's gigantic outside of China, the United States and everywhere. What did TikTok do that enabled a Chinese-based company, parent company at least, to do so well outside of China?
We think it's challenging to build a global company in general, but the best ones we have seen so far are ones that take very consistent global learnings and adapt them to the local countries that they are operating in. So you need to be global and local at the same time.
Slice through the noise. Forget the noise. Ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal. Now, more to the point.
What is the lesson or the observation?
Equities high here. Let's get you some morning calls. First up, Morgan Stanley upgrading Tesla to overweight, saying its custom supercomputer could add another $500 billion to its enterprise value. Next up, Bernstein downgrading Brown-Forman to outperform, highlighting the company's improving margins and accelerating growth outlook. And finally, Baird naming Block as one of their top picks, saying shares are oversold after Square's system outage just last week. Final word now from Jay Pawlowski and Kristen Bitterly going into the opening bow 6 minutes away. Kristen, later this week, it really is crunch time for UAW and the Detroit 3. And one question that's dominated this program over the past week is whether that is an example of a hot labor market or just rear view type mirror stuff that we'll leave behind into 2024.
I think it's going to be rear view mirror. I think ultimately when we look at the impact that something like that could have on the overall economy, it's very, very different. And I know there's a lot of comparisons that people are making back to the 1970s when you had unionized labor representing, close to a quarter of all of the U.S. Labor force. Now it's around 8%. And so while that is something that obviously could have an impact, it's something that could lead to stronger wage growth overall. I don't think it's something that is really going to drive a lot of the economic activity and a lot of the market activity into the end of this year.
Jay, which one is it?
Yeah, I would concur with that, Tom. We're really focused on real income growth, and as inflation comes down, as disinflation takes hold, the consumer is actually generating real income growth, and that's our focus. That is what we believe will sustain consumption and drive a shift from inventory destocking, which is what we've had over the last year, to inventory restocking, and that's what's going to drive the manufacturing rebound we expect to see through the end of this year and into 2024.
Manufacturing up to services and not services down to manufacturing. The bullish outlook from Jay Pawlowski alongside Kristen Bitterly. To the two of you, thank you. To kick off the trading week, 5 minutes away from the opening bell. Equity futures pushing higher here by 5 or 0.6% on the S&P. Into the bond market, yields drifting a little bit higher as well on a 10-year yield higher by, let's call it 2 basis points of 4.28. Coming up, JP Morgan's David Leibovitz joins us on why US equities are poised to outperform the rest of the world. That conversation is coming up next. Your opening bell is just around the corner.
I don't think we can replicate Tesla. Tesla is a unique because when they founded, and then the personality behind it, the product is beautiful, technologically very, very strong. So in many areas, Tesla is Tesla, but Xpeng is Xpeng. We want to focus on what we think is important for our customers. Our customer like beautifully designed vehicles, either it's large SUV or sports sedan. We believe we have a very, very appealing family look that our customers is really attracted to. They like to have user-friendly features inside the cabin that has a technology feel. It's very smart. It enables them to really utilize the vehicle that's different.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
I think of myself as a realist, trying to see the world as it really is and not the way I'd like it to be. And sometimes I succeed and sometimes I fail in that.
Markets count down in Europe from the financial centers of the world. Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
It's 24 seconds away from the opening bow this morning. Good morning to you all. Equity futures pushing forward, up higher, positive by 0.6% on the S&P. On the Nasdaq, up by 0.8%. Looking better this morning. We'll talk about that move in Qualcomm a little bit later in about 5 minutes' time. There's your opening bow. Switch to the board and get to the bond market. Going into CPI later this week. Retail sales later this week as well. That's Wednesday and Thursday, respectively. Yields higher by 2 basis points into that, just short of 430 at 428.60. After 8 consecutive weeks of dollar strength, we pulled back just a touch against the euro. Had a little look at 106 in the past week, 107.35 this morning, positive by 0.3%, and just shy of $88 a barrel on WTI, near the highs of the year, 87.95, positive by 0.5%. About 30 seconds into this session, equities higher by 0.6%, punchy on the Nasdaq. One stock to watch at the open is Tesla. Morgan Stanley upgrading shares to overweight on potential upside from its Dojo supercomputer. The analyst writing this, quote, "The same forces that have driven Amazon Web Services can work at Tesla, opening up new addressable markets." Simone Foxman has the story. Hey, Simone.
Hey, John. Yeah, supercomputer Dojo is being designed to essentially allow massive amounts of data during training processes to be processed by Tesla. And analysts at Morgan Stanley saying it could be worth add as much as $500 billion to the company's market value. Last close, we were at $790 billion worth of market value. So enormous amount of potential value added here. But the Morgan Stanley analyst also writing that it could put Tesla at an asymmetric advantage in a market that's potentially worth $10 trillion. The idea is essentially that it could make the company a software and services company rather than one just simply focused on hardware buying, allowing this training data to be processed more quickly. Now, this is particularly interesting, however, because just a couple months ago, back in June, these same analysts at Morgan Stanley, led by Adam Jonas, saying that shares were pretty fully valued there around $265, but now putting a new price target, $400 on the stock. Shares, of course, in the moment about $261. Up about 5% in today's early trading, John.
Simone, thank you. That 5% move in the first 2 minutes, that works out roughly $41 billion of extra market cap for that name right there, just like that. Turning to big tech, 2 names for you, Apple, Qualcomm. Apple is extending its agreement with Qualcomm for 3 more years, signaling its own more. Monaghan.
Technology is the modem that allows iPhones to connect to 5G networks or prior generations of lower scale network. And this deal runs for iPhone for 2024, 2025 and 2026. You'll remember, John, that Bloomberg's reported that in-house, Apple has been working on its own modem along with its other proprietary silicon strategies. And the story here is that doing it yourself is difficult, particularly when you want your modem to be able to connect to the latest generation network 5G, but also work across jurisdictions. And what's interesting going into this Apple event tomorrow, and I think you and I will talk about this later in the program, is that we believe the iPhone 15 that was to be launched tomorrow would be the last generation that used a Qualcomm modem chipset. Well, based on the agreement that's out this morning, that is not the case, and Qualcomm will be the modem supplier for the next 3 years and 3 generations of iPhone to come. Financial terms were not disclosed, although it was indicated by Qualcomm that the agreement in terms of dollar volume or dollar amount is the same as their prior 2019 agreement. You and I have talked about what drives an upgrade cycle. We used to talk about the 5G super cycle. One thing that analysts point to is that this is pretty bullish for Qualcomm, bearing in mind that it won't be that long before we talk about the 6G super cycle and what that might mean to keep Qualcomm in this position as the pivotal supplier to Apple.
We're discussing this in about 10 minutes' time. You also know that I want your view on that last story. Adam Jonas, that call over at Morgan Stanley. Ed, I know you've read that. What did you make of it?
Yeah, look, it's really interesting because Adam Jonas first came out with this thesis in 2015, right? That the long term of Tesla would be very different to just being an electric vehicle maker. He saw them as offering a service akin to an Uber or a Lyft, a rideshare service where Tesla controlled its own fleet of vehicles and the proprietary software. Fast forward to 2023, and that's not quite reality. But in all the conversations around NVIDIA and them having the leading GPU for AI and training large language models, we were talking about Dojo in the context of training data, neural networks before NVIDIA. It's an area that Tesla has some competence in. They've pledged to invest about $1 billion in R&D to continue doing that. And the point that Jonas is making is that it opens up more end-user use cases, the ability to sell software services at a greater scale. So 2 things. Caution on Adam Jonas's history of making big predictions, but also credit to Tesla in the work they've done in proprietary silicon and in computing.
Helping to lift this market as well. Tesla up by 5% or so. Ed, thank you. Big move on the Nasdaq, up by close to 1%. On the S&P 500, up by 0.75%. That move on Tesla, potentially the best move of the month so far for Tesla. Sticking with tech, Citi expecting shares of Microsoft to outperform, saying this: the stock could trade well into earnings with a stabilizing PC market and accelerating revenue trends. That stock up also by 1%. Some big calls out there for tech. I want to turn to M&A. J.M. Smucker agreeing to acquire Hostess Brands for $5.6 billion. The Hostess CEO saying this: we believe this is the right partnership to accelerate growth and create meaningful value for consumers, customers and shareholders. Isabel Lee has this one. Hey, Isabel.
Hey, John. So investors will get $34.25 for each Hostess share, and that's a 22% premium from Friday's close. And shares of Hostess, which is the Twinkies maker, has surged more than 26% since before August 25, and that's the day that Reuters first reported that they're exploring a sale. So company sees the deal adding to an adjusted EPS in the first fiscal quarter, and they expect it to close in the third fiscal quarter. So that's around April 2024. So Bloomberg Intelligence says this acquisition may revive growth in the consumer division, and bakery goods have soared during the pandemic, and Hostess holds around 19% of that market share. As for Smucker's, it's fallen around some 11% year to date. But here's one thing I learned, John. Smucker was founded in some 126 years ago by Jerome Monroe Smucker, selling cider and apple butter door to door in his horse-drawn wagon. And now it's a $14.5 billion company. For now, those shares are lower by around 8%, while Hostess is up around 19%.
And now they're getting a piece of snacks that have no expiry date. Is that right?
Probably. I actually don't eat that a lot.
Extra long shelf life. Like 20, 30, something like that. Isabel, thank you. The latest there on that story. I want to turn to the media space. One question. Bills Jets, can you even watch it tonight? The contract dispute between Disney and Charter could leave New Yorkers in the dark for tonight's game when the Jets take on the Buffalo Bills. New York Governor Kathy Hochul, and Bills supporter, is pursuing repayments for subscribers, saying this: it's simple. If you pay your cable bill, you deserve to get the services you pay for. Abby has more. Hey, Abby.
Hey, John. Well, that does seem like a reasonable proposal by Governor Kathy Hochul, although I'd almost be willing to bet that she might no longer be in office by the time that made its way through Albany. Now, putting all all of that aside, of course, we're talking about a financial feud between Charter Communications and Disney. On August 31st, Disney pulled ABC, ESPN, and some of its other channels from Charter, which owns Spectrum. So you have 15 million people across the country that are not going to be able to watch the Jets' opening season game. Now, in normal seasons, this might not mean all that much. We all know, even I as a non-football person knows, that the Jets is pretty beleaguered. They have not been in the playoffs since 2010. That's the longest drought for any team in any major sport here in the USA. But we have Aaron Rodgers joining the team, so everybody wants to see this game. So you have folks, especially here in New York State, 1.5 million people who may not be able to watch this game. Now, of course, they can sign up for other streaming services. Bars here in New York are really excited for the business as folks come in to see this game. But you have this financial feud again, where Spectrum is claiming it offered Disney a fair deal to carry its channels, but Disney demanded an excessive increase in price. There's no end to the blackout. On the year, John, Disney down 6.1%, Charter up 25%. This, of course, as Disney works to go through some of the kinks, including its struggling TV business.
Abby, thank you. If New York sports was a stock right now, it would not be doing well at all. About 9 minutes into the session, equities positive by 0.6% on the S&P. JP Morgan's David Leibovitz weighing in on the road ahead for markets and writing this. Growth is proving to be resilient against the backdrop of significant monetary tightening, suggesting that a tension between growth and inflation is beginning to materialize. David joins us now for more. David, can we start there? Can you start on that tension between growth and inflation? What do you mean by that?
Absolutely. So, if we go back to the beginning of this year, everybody thought that the second half of 2023 was going to be particularly challenging from an economic perspective. And what we've seen in the event is simply more resilience in the growth data, and that's continued throughout the third quarter, which obviously makes it difficult for inflation to return to where the Fed would like it to be. I oftentimes think about inflation as being like economic sweat, right? You end up with inflation when you're running an economy above its trend rate of growth. We estimate trend in the United States is somewhere right around 2%. And so the 2% plus growth that we've seen this year, we believe is going to make it a little bit more challenging for inflation to get back to where the Fed would like it to be.
What's the stubborn inflation trade then, David? Where do I want to be?
So I continue to think that the Fed will stay higher for longer, and so we continue to see opportunity in shorter duration fixed income. On the equity side, we think you want to lean into value, right? These are more cyclical companies. They tend to be more sensitive to the overall pace of growth, and so we want to take advantage of that window while it remains open.
Do they leave me exposed to the international story if I was trying to avoid the slowdown in China, the stagnation in Europe? How would I go about doing that?
Sure. So, I think value is interesting in the sense that, on the one hand, you have things like energy and financials. On the other hand, you have things like utilities and consumer staples. And so we would be leaning a bit more into the defensive parts of the value complex. But as you and I chatted about, I think last week, with energy prices at $90 a barrel or oil prices at $90 a barrel, there's arguably a story there as well. And so it's more about picking and choosing within value as opposed to embracing the style as a whole.
David, on crude, and you're right, we did talk about this last week. Let's do it again. What do you think that speaks to? 91 Brent, 88 WTI.
So I think at the end of the day, there's an issue on the supply side and an issue on the demand side as well. We're seeing, if we start with demand, we're seeing growth in places like Europe and China obviously come under pressure. But, here in the United States, things are still progressing relatively nicely. And so while pockets of demand may be rolling over, we're not seeing demand in general or in its entirety begin to show material signs of weakness. At the same time, you have limited supply. And I think that that's really been the story as of late, right, with OPEC and other oil-producing nations cutting back on the amount of oil that they're supplying to the overall market. That's pushed prices up to levels that haven't been seen in quite some time. And we can't forget about the United States, right? We obviously generate more oil here, produce more oil here than has been the case in the past. But do we produce the right type of oil? And that's why I think you're seeing diesel prices in particular move aggressively higher.
That's a great point. Close to record output. The latest number, 12.8 million barrels a day in the United States, getting closer and closer to 13. David, when we put it all together, what's the preference at the moment? Domestic, US, or international?
So we would be leaning more into the U.S. relative to the rest of the world. When we look at what's happening in China, and it kind of feels like policymakers may have their hands tied in terms of stimulating that economy in a more effective way, You look at Europe, cracks are beginning to form. Inflation is stubborn, but growth is in the process of decelerating. And so, the U.S., it's not perfect, but arguably it's the best house on the worst block. That's where we would prefer to hang our hat. And within the United States, we do have a preference for large caps relative to small caps. We do think that volatility is going to pick up here as we get closer to the end of the year.
And some of these great brands just caught in a rock and a hard place at the moment, between a rock and a hard place. I'm thinking of Apple. I know you can't speak directly to that kind of name, but David, the exposure to China at the moment, what kind of exposure are you and the team looking to take?
So when it comes to the China story and the underlying exposures, I think that there are two ways to think about that aspect. One is the exposure on the supply side, right? Does a certain business make a lot of things in China? Two is exposure on the demand side. How much of a market does China represent? And as we've seen with some large technology companies as of late, the demand side is real. And so I think we need to be tuned in, particularly to regulatory risk going forward, because if I was a betting man, my best guess would be that we haven't seen the end of the trend that's kicked off here as of late.
I think most people sitting at home nodding their head agreeing with you. David, thank you, sir. David Leibovitz there of JP Morgan. Speaking to some of the tensions around the story with Apple over the last week, that stock down last week by close to 6%. Coming up, Apple preparing to launch its next iPhone.
What continues to come out of Cupertino is the gold standard. This is a mini super cycle, despite a lot of the bears coming out of hibernation mode, after Apple's run.
That conversation up next.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
I know one of the reasons you're here in Marrakesh and in Africa, because you see the enormous potential this continent has as a source of renewable power for electrolysis, right? That's the process by which hydrogen is extracted from water. Tell us about Africa's potential.
Africa's potential is the best in the world, and it's Africa's shot now. It's Africa's turn. What will stop Africa rightfully taking its turn will be lack of progress on technology. Companies and governments around the world choose Fortescue because we are the world leaders in technology, world leaders in next era electrolyzer design, cables, solar, all the tech which is moving our world on from having to rely on dinosaur era fossil deposits of oil, coal and gas to simply today's era of machines which make machines to harness all that beautiful renewable energy and give all the mobile energy, all the fixed energy this world could ever need by many times. Those countries who resist that are denying Africa their opportunity. And I'm saying, stop it. Let's get in behind Africa.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
they've gained an incremental 125 million users over the last 2 years. 250 million iPhones have not been upgraded in 4+ years. And if you look at this special chip camera technology and what continues to come out of Cupertino is the gold standard. And that's why I believe, especially with a lot of big carrier discounts, this is a mini super cycle, despite a lot of the bears coming out of hibernation mode, after Apple's run.
They came out of hibernation big time in the last week or so. Dan Ives of Wedbush reiterating his bull case for Apple ahead of tomorrow's big launch event. The company preparing to roll out the iPhone 15 along with their newest smartwatches and AirPods. This coming as Apple extends an agreement to get modem semiconductors from Qualcomm for 3 more years, a sign that its effort to design the chips in-house is taking longer than expected. Ed comes back with us for a little bit more. Ed, big day tomorrow. A lot of weight on the shoulders of Mr. Cook going into this launch.
Yeah, and you and I won't know if this is a mini upgrade cycle until after the fact. But what we're expecting is 4 variants of the iPhone 15. 2 base models, the 15 and 15 Plus, 2 Pro models, the Pro and Pro Max. And as Dan Ives was talking about, a big focus on the Pro lines, on the silicon updates and the camera technology. So on the iPhone 15 Pro and Pro Max, we expect Apple's A17 processor, its latest generation processor, along with a U2 UWB chip, RF chip for short distance connectivity. On the camera side, we're expecting not just software upgrades, but also optical hardware upgrades, particularly on the Pro Max, that will take it from a 2x zoom to a 6x zoom. These are substantive hardware upgrades that we haven't seen in recent refresh cycles. On the design side, titanium sides to the Pro line as opposed to aluminum or steel, a sort of higher quality but lower weight product. And then again, updates to iOS along with some kind of more minor updates to the Apple Watch series and then USB-C connection coming to the AirPods. The timing of this Qualcomm announcement this morning really interesting because we believe that the iPhone 15 lines to be announced tomorrow would be the last generation that Apple relied on Qualcomm's modem. That's clearly not the case. This deal between the two runs through to the 2026 edition of iPhone. And as you said, it's evidence that making it yourself is hard. Apple isn't quite there with its internal work on the modem. Qualcomm has the best chip at connecting to 5G networks, and it won't be long before we're talking about 6G networks. Just real quick, John, on silicon, the base models of iPhone 15 and 15 Plus, they'll have the A16 processor, which was in the 14 Pro lines. So they're just recycling their tech from those Pro last year and moving them to the base model this year. Gosh, that's a lot.
Speaking of challenges, just away from all that jargon, just for a moment, the 2 big challenges in the past week, 1, Huawei, 2, China, and China specifically banning phones at the government level and maybe across the state firms as well. Ed, what do you think is the bigger issue for that company at the moment?
Yeah, look, I still go back to what Apple told us in the earnings call, and I'm surprised that more people aren't speaking about this. China was a pocket of strength in a broad, weak quarter for Apple in the June quarter. It was a record in China in the June quarter. They swung to 8% top-line growth in China from a 3% decline the prior quarter. And they attributed it almost solely to switchers, consumers in China buying an iPhone for the first time or switching from a non-iPhone or non-Apple brand. So my question to the market is, does this Chinese government action impact the psychology of the consumer there such that it outweighs the hardware upgrades that are coming in 15? It's still such a key market. So the impact, we don't know what it will be because we can't quantify how many users are sprinkled across these government agencies. But it's worth asking the question.
I'm asking precisely the same thing. Ed, thanks for being with us, mate. We'll catch up with you tomorrow. Let's stick with tech. Oracle earnings coming after the closing bell. Investors focused on whether its cloud unit can continue gaining market share. The analyst over at Mizuho had this to say: despite the uncertain macro demand for back office applications remains robust. Anurag Rana of Bloomberg Intelligence joins us now for more. Anurag, what can we expect a little bit later?
Yeah, I think we should expect decent growth on the back office cloud applications. But to be very honest, the biggest question is what is going to be the cloud infrastructure growth, because that's the big number that surprised everybody last quarter. It grew 77% in constant currency. And that's where I think the bulk of the call is going to be around that particular product and how it's gaining momentum. in an area where Amazon and Microsoft are, the growths have been slowing down in the last 12 months.
We'll get your reaction a little bit later today. Anurag, thank you. That stock is down by a little more than 1%. Those earnings coming after the close. About 22 minutes into the session, equities advancing here by 0.4% with some sector price action. Here's Abby.
And that gain for the S&P 500, John, is the best day in the month of September. Right now, not surprisingly, we have most sectors higher, led by consumer discretionary up 1.6%. Tesla is greater than 5% gain on that Morgan Stanley call, really helping out there. Tech overall, though, down slightly. Industrials also down. Over the last couple of months, John, in fact, in this quarter, one of the best sectors, energy. It's heading to its only up sector this year and the best sector since December of last year, up 12%. Really a turnaround there.
There we go. Abby, thank you. Coming up next, your trading diary, stacked week, just around the corner.
Have you thought maybe I should go do something else? I can't do anything better than I'm already doing. I've already turned this company around. I've made a lot of money for the investors, the shareholders, and yourself. Are you happy doing this? You're going to do this for the foreseeable future?
I'm going to do it for the foreseeable future. I love what I do, and the reality is we've accomplished a lot. As you described, we've made Blackstone a lot of money. We made our shareholders a lot of money. More importantly, we've grown the business, and we've been a huge engine of opportunity. If you think about all the jobs we've created around the world, all the communities we've made better places, all the ownership groups who we've helped grow their business, and having built a world-class culture, the opportunities we've created for upward mobility for people. And this business, I would still say, is like a coiled spring coming out of COVID particularly. So I feel like we just have more to do. My job's far from done.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
So far, so good. Early days, I know. 25 minutes into the session, equities advancing here by 0.5% on the S&P. The Nasdaq looking okay as well, going into a key week again for Apple and that launch of the iPhone 15 just around the corner. That's the equity price action. Here's the trading diary. Coming up, President Biden delivering remarks in observance of 9/11. That's at 4:45 Eastern from Alaska. Tuesday, Apple's launch event from Cupertino, California. Wednesday, we'll get US CPI data. Thursday, initial jobless claims, US retail sales, and an ECB rate decision. And finally, the UAW strike deadline with Detroit's Big Three. Big week ahead. From New York City, this was the countdown to the open. Thank you for choosing Bloomberg TV. This is Bloomberg.
crucially important. And I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is gonna be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. This is Bloomberg Markets with Paul Sweeney and Matt Miller.
We got a lot of green on the screen here, but the volume is light.
We constantly underestimate the strength of the U.S. consumer.
This is a market that's much more optimistic or bullish than maybe the central bankers are.
Breaking market news and insight from Bloomberg